From the outside looking in, it can sometimes appear that peak performers have an elusive talent or skill that sets them apart from the rest of us. However, what usually sets peak performers apart isn't what they can do, it's what they will do. You are listening to the Trading Edges Podcast, the podcast dedicated to seeking and sharing the best ideas and principles from peak performers across all domains of performance and achievement to help you discover your full trading potential.
Greetings, ladies and gentlemen. This is Houston, and welcome to the 5th episode of Trading Edges, brought to you by thetradingedge.org. Now, in this show, I have the great pleasure of interviewing author and hedge fund manager Bruce Bauer. Bruce is the author of a great book called Peak Performance, Trading and Investing. And the book is really a wealth of knowledge on how traders can achieve that peak performance in trading. So in the interview, I really pick his brain on a plethora of topics, including the importance of a trade plan, the need to focus on making good decisions or decision making, how to use visualization, mindfulness, developing skills for peak performance, and a lot more. You're just going to have to listen to the whole podcast to get the full brain dump. So get your pencil and paper ready, or head over to our site to pick up the transcripts and show notes. In the end, we really only scratched the surface of Bruce's book, so I really recommend picking it up if you want to dive deeper. Thanks for listening to the show, and as always, we love to hear your feedback. So leave us a line, drop us a line, or leave us some positive feedback on iTunes to help others find the show. Now, on to the interview. Hi, Bruce. Welcome to the call.
Hi, Houston. Thanks for having me.
Absolutely. How are you doing today?
I'm doing great.
Good.
Happy Monday, as always. So, how about yourself?
Yeah, it's a pretty good Monday. And for the folks on the call, Bruce is actually dialing in from London. This is actually where he's based out of. So he's been generous enough to call in during his his evening hours. So thank you, Bruce.
No, thanks for having me. My pleasure.
Yeah. So before we get started today, and for the folks who may not have seen your blog or read your book, which we'll talk about in a few moments, maybe you can just spend a few moments just telling us a little bit about yourself. So what's your trading background? Do you have maybe a funny story or an interesting story you can tell the audience, and maybe also tell us today, what you're doing today around trading, what keeps you busy and what keeps you active.
Sure. Well, my background is that I'm from the U.S. and I grew up and I went to college in the U.S. And then when I was in college, I heard about this dream job that was offered by a place called Citigroup, and this is a kind of a legacy. They used to have Citibank and then Salomon Brothers, and they merged, and there's this artifact left over from Citibank where they would hire like guys right out of college, give them big risk limits immediately, and let them go. And if you did well, then it was a gold mine. And so I interviewed for that job. I wanted it, and I actually got it. And then that took me to London because that's the center of the FX trading universe. So I started out, I'm in London, exciting city. It's a great job, great resources around me, wonderful people, really smart, really interesting. I could learn a lot from them.
Yeah.
So great situation, and I totally screwed it up. So I lost money and over the space of about 2 years. So by the end of that, I was despondent. I was really angry at myself because this was a great opportunity. I really enjoyed it, but I wasn't cutting it. So that was a very frustrating experience for me as a trader, especially considering I'd been trading my own money when I was in college, and I'd made money. And I really went on a big exploration what was I doing wrong? What could I fix? What did I need to do better? What did I need to learn? All kinds of questions. And I sort of hit the reset button. I got a job at a hedge fund it was based in London, and then I ended up moving to Moscow with them. And in that time, I was learning new markets, and that was a chance for me to really just start with a blank slate. So I did years of exploration and research and started to figure some things out. And then, I was in Moscow. It's a pretty small investment and trading community. So I started a blog to start a dialogue with the rest of the world and, just to get my thoughts, my ideas out there and to interact with other people. And that grew into a blog where I was updating it every day or every week. And then I was interacting with, I was guest posting with, the guys from SMB, which is, it's an intraday trading shop, but they're, the lessons they teach are really about peak performance and developing expertise and mastery. And then I ended up writing a book, based on some of the ideas in my blog, which came out last April. It's called Peak Performance Trading and Investing. So that's kind of my brief story. And really, at the time, my, losing money and screwing up this dream job was an awful experience. It sucked, to put it bluntly. And, but in the end, it became quite a blessing. I had to sort of double down and work harder than I ever imagined and learn more than I ever imagined about the markets, about myself. But it turned into, I felt like I had a very solid base, in markets, a very solid base in, the mental game and every other aspect of the markets and trading and investing. And that laid the grounds for future success. And what I'm doing now is, I was in Russia for many years. I left, the country, and then I started working for my previous firm, and I'm basically managing my own money now, and doing some other projects.
That's excellent. That's a great story. So maybe a couple things I could tease out there. So you mentioned on the upside of that initial, I guess, difficulty around trading. What do you think were some of your weaknesses that kind of led to that kind of those difficulties there when you first started out? Was it too much too soon? Was it just, what do you think it was that you weren't prepared for?
The biggest thing was I didn't have a plan, or I had a vague plan, but it wasn't game ready. So if you don't, as Benjamin Franklin quipped, failing to plan is planning to fail.
Right.
So, without a plan, you don't stand a chance. And there are a bunch of reasons why you need a plan. One is, as you alluded to, human beings have weaknesses when they're making decisions in the markets. There's all kind of biases that get in the way. Intellectually, we're very lazy. Just as human beings, we like shortcuts instead of the hard path. If we don't have a plan, then it's hard to stay consistent, et cetera, et cetera. So I just didn't have a good enough plan, thought out. Part of it is because of, I didn't have enough experience to know what the right plan would be and to trust it fully. And then also, that was compounded by the fact that when I got in the hole, I started trying to quote unquote make money, right? And do something and that just compounded things. But yeah, that's what I would say was the biggest problem. And it hit me when I was reading the Market Wizards books. Every single guy that they interviewed said, look, you have to have a plan, and it has to be your own. It has to be suited to you, your strengths, your personality. And I thought about it. I'm like, what is my plan? How is it suited to me? I don't really have one. And that's when I really started to turn things around, is when I realized, okay, I need to find a plan, and it needs to be a workable and a good one, workable in terms of making money in the markets and also workable for me.
Right. And so at Citi then, did they give you, were you 100% discretionary? You could do whatever you wanted to do, or did they give you some, a framework or some systems around, all right, you're allowed to do this or that, but, you have some limits around, what you're allowed to invest in or trade in?
I was on the fixed income and foreign exchange desk, so I had to stick within basically rates and currencies.
Gotcha.
And then I had risk limits, so there was this much interest rate risk I could take. There was this much FX risk I could take. But that was it, like there was no style I had to follow. There was no system that I had to use. It was, very much up to me, which, in retrospect, I probably would have been better off with training wheels than being out there by myself. But yeah, so it was, again, if you could do it, then it was a great opportunity.
And so, because that's an interesting environment. So, how many people in that environment actually went on to become successful? What was the dropout rate? Or is it a high dropout rate, or are there some people who were just kind of wired properly and they could just, be successful right from the get-go? I was curious about that.
I think that in terms of people who had like pure risk-taking roles as opposed to market makers, and market makers, back then before the Volcker rule and stuff, they could take a lot of risk too. But I was pretty much like there was one pure risk taker a year.
Gotcha.
And the dropout rate was actually quite high. And then the people who started off in market making desks actually usually did well. And there's actually a good reason for that, is that if you learn just to trade the franchise, so bid offer, make money off of customer business, then your confidence grows steadily because, you make some money. And then also you start taking risk because, your customer business would leave you with some positions, like a customer pays you in like, to give you an example, in interest rate lends, a customer lends to you in 3 months and then they borrow from you in 6 months. Another customer borrows from you in 6 months. So all of a sudden you have a position in 3 months, 6 month interest rates. Right? So you're taking risk just because the customer put you into that position. So, you start, it's a nice training wheels way of getting into taking risk. And in retrospect, it makes sense that more of the guys who were starting off that path, went on to be successful. They had a nice glide path. Whereas I think for me, it was, it was probably a bit too much of an ask. But,
it's a
wouldn't change it for the world.
Yeah,
I wouldn't change it for the world either. So.
Yeah, that's great. And so what's your and then we'll talk about your book in just a few moments. So what is your take about, finding the right style for yourself? Is there, and then I guess the second part of that question is, what is your thoughts around just sim trading versus trading, with live money? Is it a good idea to have just, trade a little bit of capital so that at least you can feel those kind of psychological, pangs when you lose and when you win? Or just what are your thoughts on those two elements?
Yeah. Well, what worked for me was actually, it's a long story, but I ended up switching product sets. So instead of doing rates and FX, I did equities. And I think for me, equities just suited my personality a little bit better. There's more story and there's more kind of, they're more dramatic or more volatile moves. And I think that for whatever reason, just suited me better. I don't actually know why, but, I just seem to like it more. That helped. And then after that, it was really about finding a plan that worked. And what I talk about in my book and a few of my blog posts is actually if you're looking for a plan when you're just starting out, copy. I mean, intellectually, people think it doesn't sound rigorous, but look, if there's something out there that kind of works and it looks like it would fit you, just copy it. There are a couple of reasons why. One is that, if there's something out there and it works, don't reinvent the wheel.
Right.
And then the second thing is that, you, as a beginner, it's more difficult to learn how to execute the plan properly, right? So you can plan the trade all you want, but you have to be able to trade the plan, right? You have to be able to carry it out according to specifications. And this is a long way of answering your question. And I think that's why you should trade with real money, even if it's tiny, because, there are emotional ups and downs, and you need to learn how to execute that plan, with real money. even if there are emotions. You need to be able to say, all right, this is the game plan. I'm going to stick to it no matter what. You need to sort of reframe the game almost to being one of, I'm going to make the right decision, and I'm not going to think, in the short run at least, about, the ups and downs of P&L. I'm going to think about, what do I need to do right here, right now? What's the plan call for? And, it's really easy to do that emotionally with simulating or with paper trading. Once there's money involved, then the emotionality starts and it can become more difficult. And then gradually you build up the capital that you're risking, and that also sort of builds up your emotional tolerance. So to give you an example, I was a Russia-focused fund manager for a while. And then with my own money, I started doing more emerging markets. So, South Africa and Turkey and Poland and all of those places. And I started off with tiny amounts of money, like really inconsequential. But it was, just like I'm saying, it was to test it out. The other markets are different. How they work is different. And then after a while, I put in more money because, I felt that I was on the right path and I could take more risk. But yeah, even when I was, I've been a professional fund manager for a while, but even when I was starting out in somewhat uncharted territory, I kept the risk small, but it was still risk, so that I would learn, trial by fire, but so that it wouldn't do any lasting damage to myself if I did something wrong.
Sure. Yeah, that's great practical advice, because it's something about having a little bit of skin in the game that just makes it a whole lot more realistic. I don't know if it's the way that we encode that into our memories, or just the way how just how deep these things wire once there's live money on the table. But just trading in forever doesn't seem to have the same effect as trading with live money. Even like you said, even though it could just be small positions, it makes the biggest difference in the world.
Money is a very emotional thing, whether we realize it or not. And so what you're doing when you start putting money on the line is you're raising the emotional stakes, and that, that engages you. It's like, if you read a bunch of facts and figures versus reading a story, right? The story has emotional content. It engages you more. So it's the same thing. And then, it's interesting. A lot of the troubles that people have when they first start out in the markets, it's because of that emotional content. That say, even if they're risking $5,000, right? Or they have a $5,000 account, they're risking $100 on a trade, and then they think, oh my God, I just lost $100. That's, a nice dinner out.
Right.
Scale the stakes up, right? They have a $500,000 account. They lose a couple $1,000s on a trade. You think, oh my goodness, that's, a nice vacation. But, your mind, if you're not trained and you're not sort of practiced in this, then your mind starts racing to, oh my goodness, that's actually a lot of money, and what does that mean? Or that's also where greed comes from, right? You say you have a $500,000 account and you make $25,000. You think, hey, like this is good. Like pretty soon I can quit my day job. I can do this full time, and your mind's off to the races.
You're well,
and that's why you need to. And that's why you got to take it easy, emotionally speaking, and ease into it, because, but that's also why it produces engagement, right? So, the way to balance it is by starting small and then gradually working up so that you can handle it. If you put too much risk on, then, you can't handle it and you're going to make the wrong decision. If you put no risk on, then you don't care because there's no emotional content to it.
Yeah, I think it's Kahneman who always writes about, or I guess his work's the most influential around just the power of loss aversion versus, how that just greatly supersedes the feelings that we could get when we make a little bit of money. Way more scared of losing money than a bit of money. But I think you also mentioned just, the takeaway from what I'm getting from what you're saying there is also just how deeply important it is to be rooted in just taking good decisions, right? So I know a lot of your book, and let's talk about that now. You have a great book called, like you mentioned already, the Peak Performance Trading and Investing. It's really a book that's chock full of stuff. I I think I don't know how much time you spent researching that book, but there seems to be so much content in there around decision making, how to do good practice, how to visualize, how to build good habits, goal setting, creating a trade plan. Like, I could go on and on. Maybe I'll ask you some of these things in a few moments. But maybe you can just tease out a bit. You do spend a lot of time writing about trading as decision making. So why do you make that analogy? Why do you link those two together? Why isn't trading just more like just shooting from the hip and taking the setups and leaving it as that?
Well, I mean, if you think about it, the goal is obviously to make money, right? But the reason why I emphasize decision making is because making money is the output, right? There are two inputs really. There's your actions and then there's the market. Now, with the markets, there's always an element of randomness or of chance, right? You could buy a stock and then the next day, God forbid something happens, the CEO dies in a plane crash or they pre-announce earnings that are bad or whatever, and you lose money. Even if it was the best thought out position, there's still the chance that something goes wrong. And, so to some extent you can't control fully the outcome. So what you have to do then is focus on what you can control, and that's making the right decision. So Michael Mauboussin has written a bunch of good things on luck versus skill, and he says where there is an element of luck, focus on the process. And that is, the process or the skill that we're practicing, that we're using and that we can control is making the right decision in the markets. Now, we can control making the right decision, and then, that plus the market means that in the long run, you should make money. But on any one position or one instance, that doesn't mean that the right decision will make you money. It just means that you have to make the right decision from a statistical standpoint. So statistical meaning, if I do this, make this decision 100 times, then, after 100 times, I'll probably be ahead. The other reason why I say to focus on making the right decision is so that you're rooted in the process and you're not paying attention to money. You're sort of tricking yourself out of thinking about money and instead thinking, what's the right thing to do now? So, what you just mentioned about focusing on setups, et cetera, that's a subset of making the right decision. But it also keeps you rooted in risk management. So if you have a loser, and this is in sort of opposition to human loss aversion biases, right? Where we don't want to fix a loss because, that would mean actually taking a loss and ouch, that hurts. Instead, the right decision is that, I put on a position, it's going against me. It's not, this is my level where I get out and you're out. And that's the right decision to make, even if it's not fun and even if it doesn't make money, is to cut your losers short at a certain point. Same thing as, if you have, like in Mike Bellafiore's book, The Playbook, he talks about how different traders and investors have different setups that they do. Right. But for each of them, the right decision is if steps 1 through 6 are in place, then, put on the position. So that's why, I've casted decision making as the right thing is because, what we're doing and what we can control is making the right decision in the markets. And then, if you focus on making the right decisions, then you'll combat all the things that get people in trouble, like emotions, like biases. And then also, I would mention that not having a plan, if you're making the right decisions, then that also means sticking to your plan, or at least, improvising in a way that is in harmony with your plan. So yeah, the more that you think about it, the more that you stay focused on making the right decision, then, the better off you'll be long term.
Yeah. And like you just mentioned there, it all fits within the overall scope of your trading plan. So I know in the book you lay out several trading plans from kind of amateur to more professional. And I definitely would recommend folks reading that section. Just if you haven't built your trading plan yet, then take a look and see what kind of would constitute a good plan. But what do you think it is? Why is it that you think so many people? And you hear it all the time. Most people when they first start trading, they usually don't have a trading plan. It takes them, I think, quite a bit of of pain before they decide that they need to build a plan. What is it you think that is it just the misunderstanding of how I guess maybe it's misunderstanding how to be a good trader, or is it just not having the right education when it comes to trading? Why do you think that most people still operate without a plan? Do you have
that's a really good question. I actually don't know. I've started to do a lot more research about beginners and what's important to them and how they get started. And I think that for most people, they just underestimate the challenge involved.
Yeah.
And everyone knows of somebody who, took a lot of risk and basically bet it all on black, the market equivalent of betting it all on black at the roulette table,
right,
and made money. So,
right.
They hear that story and they think, oh, this is easy, I can do that too.
Yeah.
And so, stories like this, and of course, we forget about the guy who lost it all. We only hear about, and what sticks in our mind is the guy who made lots of money.
Right.
And that leads people to underestimate the challenge involved. Everyone understands that something like surgery or being a chess grandmaster or being, an NBA player, that it takes a tremendous amount of skill. You look at someone who, like Michael Jordan, and you think, oh my goodness, I could never be that good. But when you look at someone who is trading or who is investing, you can't tell what the skill is. You can't tell where it comes from. You just see them punching a couple orders into a keyboard and reading financial statements or charts. So, you don't realize how much skill is involved to be one of the best. And I think, if I had to guess, and this is an educated guess I'm making, people just underestimate the challenge involved. And that's one of the reasons why in my book and in the blog, I sort of pound away at it, is because, if you want really to set yourself up for success, the best way to do it is to have a rock solid plan and to learn to follow it.
Right.
You may not become one of the greats, but that's going to help you to do pretty well, and certainly to avoid a catastrophe. And the comparison I would make is in sports. If you learn all the fundamental skills, if you're playing basketball and you learn how to shoot the ball properly and you learn how to dribble and you learn how to play defense properly, yeah, you may not be the best player ever, but, you have a decent chance. And that's the same way we should think about it in trading. And then the same thing with, as in sports, you don't need to reinvent the wheel when you're starting out. Just a decent plan, is probably gonna get you started. And then the real hard part, the real challenge comes not in coming up with a plan, but it comes in when you actually have to stick to it. Because then you have to make decisions. The markets are dynamic. They're always changing. And it's really hard to keep up with that. And then you have your whole emotions to deal with. And then, the little, you can imagine the cartoon of the angel on one shoulder and the devil on another shoulder. And that devil is always the one whispering in your ear and making you do stupid things. So, learning to control that is hard.
Yeah.
So all of those, people underestimate the challenge involved overall, then, they don't know how to proceed, and then they sort of overcomplicate it. And, they should just find a plan that looks good and, one that checks out, right? It's sort of vetted, and then, they should get going with that and then learn how to execute it.
Yeah, that's great perspective. And, no, that's so true, especially for newer traders. You could spend years trying to create your own plan or perfect, set of setups, and your own methodology, but why not just kind of borrow wholesale or do as artists do. Artists steal from other artists or copy, and there's nothing wrong with that. You can make it your own eventually, but in the beginning you can save yourself a lot of time by just borrowing from someone you trust and who has a good track record. So I totally agree. So
yeah, absolutely.
Go ahead.
Oh, no, that's it. Sorry.
Yeah, let's tease out some of the other ideas you have in your book. So as we start working our way, like you mentioned earlier, you got to have that foundational stuff down pat. Like that's just going to get you in the game, right? You're not going to be Michael Jordan, but you need to have at least the foundational stuff. What can traders start to work on after they kind of get the foundations to begin to to build those other levels of mastery. So, for instance, you talk a lot about doing we've all heard about the Malcolm Gladwell's, I guess he's popularized Eric Anderson's, Anders Ericsson's 10,000 hours of work. Talk to us about, kind of the deliberate practice and how traders can apply that into their trading. How do you take that concept and apply that to trading?
Yes, so that's excellent. An excellent reference is Anders Ericsson he's probably the leading psychologist who studied the development of expertise and mastery across fields. So chess and sports and music and all of that, anything that's measurable. And what he's found is that it usually takes 10,000 hours of deliberate practice to develop mastery. Now, so 10,000 hours, that speaks for itself. That's about 7 years at 4 hours a day. Deliberate practice is practice that's designed to build or to work on one skill or a specific skill. It's designed to be hard. You to give an example, if you just are dribbling the basketball around your driveway, that's not really deliberate practice. If you're doing, free throw drills where you have to get 20 free throws in a row and you have to practice your form and be perfect with your form, that's hard, right? And that's building one specific skill set. So that's more an idea of deliberate practice.
Yeah.
So, it takes long, arduous effort designed to build skill to achieve mastery. And what I really emphasize for traders and investors is that, it's going to be the same in this endeavor. And really, what I would emphasize is that some of it, the way you start is by having a plan. It doesn't have to be a perfect plan that you've come up with from scratch. Like we've both, mentioned, you can just copy. But you get started with that, then you learn how to stick to it. You learn how to trade the plan. That's you starting to implement the skills that you've learned and turn them into automatic skills. It's just like people who can dribble between their legs without thinking about it, right? You're getting there. But then the way that the real nitty-gritty of how peak performers develop is through constant reviewing and tweaking. So, athletes will watch hours and hours a day of film, and then, they'll see what they want to improve, either because they're not doing it well enough or because it's good, but they can think of ways to take it to the next level. And that really interacts with the first two steps. If you have a plan and you can stick to it, then you can review it, and then you can make some tweaks where you say, actually, this is my plan going in, but maybe I can change this and do something differently, and that will be better. And then you change the plan up. You know that you can stick to that plan. So then, you test it out for a while, you see how you do, and then you keep modifying. And that revolves around your plan. It also revolves around how you implement the plan. And that's really, I think, after years of iterating that, most people will get to a really competitive level in their investing or trading. They'll know how to plan. They'll know the importance of sticking to it. They'll know how to do that. And then they'll have refined things over the years so that, they're extracting a bigger edge from the markets, so that, their sort of risk-reward balance is really working for them, et cetera. Some of the things I talk about in the book are what, just like in any field, there are certain truisms or there's certain basic things that work for that you'll find that are characteristic of any winner. So in the markets, there are a few, like you have to have a methodology, it has to be suited for you, but there are a couple others that are more subtle. Like methodologies all have a couple of characteristics. One is that they have a statistical expectation that's positive. So if you take the winners and how much you make on a winner versus the losers and how much you lose on a loser, over the long run, you're going to be ahead. Either, you're winning 30% of the time, but you're making 4 times on your winners what you lose on your losers, or maybe you have a high win rate, like 60%, and you're squeezing out, a little bit more on your winners than your losers. But, however you formulate it, there's positive statistical expectation. Another characteristic is that they have a system for managing risk and also for sizing positions. Not every position will have the same conviction level, and it shouldn't be sized the same. So really, the real great ones, they know how to put more money behind, the better ideas, the better risk-reward ideas.
Yeah.
And then some of the tools that I talk about in the book are, like the Kelly formula is a mathematical expectation. It's a formula that says, okay, if this is your expectation on any any individual position, this is how much you should risk. I'm not saying that it's the gospel truth and you should stick to it, but it's a good way of orienting your thinking.
Right.
And you should have some system like that for managing your risk and for thinking about how much to risk on individual positions.
Right. So you know which setups when they're working well, how to size them, and you want to be betting on the horses that are winning versus betting on the losing horses, right?
Exactly. And then also so that you don't take so much risk on an individual position that you run the risk of bankruptcy or of a real hit.
Yep.
And then, so that's all the basics. That's all. If you do all that, you'll be probably successful. But just like you were mentioning, if you want to be the best, then the game shifts. It's not just about the basics and the fundamentals. It becomes more about the mental game. So as you do a lot of the reviewing and the tweaking, you'll realize that, you as the person making decisions, you need to get better.
You're the limiting factor, right? You're the person who's actually holding back the performance. Yeah.
Yeah, exactly. And then there are certain things you can do that are corrective, so fixing, if you have, for instance, fears, emotional things that get in the way, that cause you to panic at the wrong times or whatever, I talk in the book about a lot of tools that peak performers use to correct things like that.
Yeah.
And then some of the others are generative. So athletes, for instance, use a lot of visualization because it suggests to you a certain outcome, and your brain sort of subtly pushes itself in that direction. Another example would be mindfulness, where you get your brain in a calm, almost meditative state. It helps your attention span overall. Those lay the groundwork for improved performance, no matter where you're coming from.
Yeah, let's go there. Let's talk about mindfulness for a second, because I know you have a series going on of vlogs right now talking about a mindfulness experiment that you're currently trying out, and I think you're in week 5 now. Is that right, of your experiment?
That's what I'm doing now. Yeah.
Yeah. So tell us a little more about that. I know you're inspired by a book to try this experiment. So tell us more about what you're doing there.
Yeah, so I like to talk about how the mental game is sort of the way you go from good to great. And I've always, over the last few years, I've tried all kinds of techniques, and I found some that really work. So visualization, I've written a bunch about this. I borrowed some techniques from the sports psychology world and from the therapy world and modified them very heavily. But I found some things that work in terms of visualization. And then I was intrigued by mindfulness because there's a lot of really good literature about it.
Yeah.
Started to do some research on it, and then around that time, a book came out called Trader Mind, and it's written by a friend of mine, Steve Ward. He's a professional trading coach. He's based in London. We meet up from time to time. And I really liked the book, and it had a good step-by-step, hold your hand kind of guide to mindfulness as applied to trading and investing. And so I read it, I enjoyed it, I started to do the exercises, and then as a way to commit myself to doing the exercises, I started a series of blog posts online.
That's why. So you wanted
walking through them.
Wanted to be accountable.
Yeah. Best way to be accountable.
Absolutely.
And then, I haven't done it. I sort of 1 week of time in the book is taking me about a month. Because I want to get it right, and then also because I publish different things during the month. So I won't. So I'll write a couple of different topics during the month, not just about mindfulness. But so that's how I've approached it. I found that I'm very ADD by personality, sort of all over the place. I had a hard time with it at first, a really hard time.
Really?
It was brutal. To sit still for 10 minutes. Oof. And then the second part that was really difficult is, with mindfulness, it's really about learning to train your attention span or your focus. So you get these random, when you're sort of practicing that, the way you do it is you just let thoughts come into your head. And instead of saying, shut up, you say, okay, that's an interesting thought. Okay, I'll just let that one pass. And that was actually that was new for me. That was a completely different way of doing it. Before, if I was getting distracted, I would say, shut up, like stop these annoying thoughts. I'm trying to work.
You're angry at the thoughts.
Yeah, exactly. And it's a real gear shift to embrace them and to sort of look at it with curiosity and say, oh, that's an interesting thought. Does this help me? Does it not? If it helps me, great. If it doesn't help me, then let it go on its way. But I have found, there's a test that I take every week of the course, which is, the mindfulness grading from, 1 to 100. And, I'm getting better slowly. I have noticed a difference in terms of my attention span. And then just the way I approach certain activities that were automatic before. Like, if I was walking from my house to the train, before I just did it on autopilot. Now, I look at the leaves, I smell the air, and so I'm enjoying life a bit more as a consequence as well.
So share a few more of those mindfulness practices that are in that particular routine. So I think one of them is a habit breaker, but is there anything else you want to share? Like, what are some of the actual mindfulness practices that you're trying out?
Yeah, so one of them is the habit breaker, where you take something that would be a habit, and first of all, you do it differently, and secondly, you try to pay attention while you're doing it. So, for instance, the way you brush your teeth, just do something different while you're brushing your teeth. Or, if you sit in one chair while you're watching television, sit in another one. And just notice how the experience is different. Yeah. Little things, but how it helps, what that's designed to do is to break your habitual approach or where you can get stuck in a groove in the markets. So if you're looking at the markets and if you have tunnel vision or if you're stuck in a very narrow kind of framework, you may miss opportunities or you may not be as critical, in a good sense, critical of your own approach, of your own positioning. And so those are really designed to get you to think more in a more detached fashion, a more clinical fashion, and to be better able to approach the markets, from an objective standpoint, and then, to be able to train your attention fully on the markets when you want to. And I found that all those exercises have really helped. At first, no, because it took a while to get used to it. But after a couple of weeks of the exercises, I started to get used to it, and that really helped. And I found that, now when I talk about the little angel and the little devil on my shoulder, now when the devil sort of whispers in my ear, I sort of say, that's an interesting thought, and I just let it drift out. Right. And that's helped me to be more rational and to be more kind of process focused in my whole approach.
Right. So it kind of quiets that kind of monkey mind that's always going on in the background. Instead of debating trying to rationalize the thoughts, just label them and let them pass, right?
Exactly. And maybe not even label them, just, sort of uncritically say, okay, thank you for that thought. This doesn't really help me now, so acknowledge it, but then just let it go on its way.
Yeah. I'm a big advocate of mindfulness practices for pretty much anyone, but especially traders, because I just think that the field that we work in, the amount of chatter that's going on in our heads and as well as outside of our heads is just mind-boggling. So if you can just quiet that a little bit, to give yourself, like you mentioned, just a little bit of space, so that you can make better decisions, so that you're not constantly fighting all that chatter, man, you can just make some really, really big changes in your trading.
Exactly. I mean, I think Steve called it. Steve Ward, the author of Trader Mind, he called it like a circuit breaker.
Right.
So it gives you just that little bit extra space or distance, so that you don't shock yourself. Right. So that if there's something in the markets or there's some chatter in your mind, you don't just impulsively react to it, or you don't sort of feel that you need to pay attention to it and get sucked into it. You just say, okay, you can become very detached about it. And yeah, like you said, any little extra bit of detachment helps, to ward off the noise and the nonsense. And it also helps you to be more collected and to make better decisions.
Right. And anytime we can kind of turn off our mindlessness, I think, I know you talk about this in your book, that you looked into NLP, and I guess one of the big premises of NLP is that we're kind of inundated with information that naturally our brain has to sort of delete, distort some of that information because we couldn't possibly process it all. Tell me more. Did you find anything useful out of NLP? Because it sounds like you did go down that path around exploring performance.
Yeah, there's a lot that's useful with NLP. I mean, a lot of what is in NLP has been used in a lot of fields, like especially in sports psychology. So just for fun, I encourage all of your listeners, go into Amazon, type in sports psychology handbook or introduction to sports psychology or something like that. You'll see there are a lot of very good resources, and they'll have 30, 40 years of scientific peer-reviewed research backing it up. So a lot of what NLP is using is kind of related or reflective of stuff you find in performance psychology and sports psychology, in therapy as well. And then it's also echoed by a lot of modern day neuroscience. So for instance, deletions and distortions, NLP talks about, but all of the research we've done on neuroscience says that
we're now seeing that.
Absolutely, that's how your brain works. And then your conscious brain, this has been documented for a long time, your conscious brain can only hold 7 bits, plus or minus of information at a time. So that's, for instance, why phone numbers were 7 digits, because, that was the optimal length for people to remember. So, your conscious... That's true. Yeah. So your conscious brain can only sort of do so much, and you need to be very careful about how you use it. And then NLP is really, it's about a couple things. The first is managing your state, managing a lot of the things around your emotional and psychological and even physical state to get the best outcomes possible. So for instance, training your body to choose to be calmer, or sort of suggesting things to yourself, the best things possible to yourself, so that your brain takes on board the suggestion. And that's a lot of what visualization is about, is suggesting a desired outcome, and then your brain kind of works to make it happen, or maybe it removes some of the obstacles to that happening. So I found NLP, I'm not going to say that it's the holy grail or anything like that, but a lot of what it recommends, a lot of what it teaches, it's backed up by other fields, it's supported, it's used in other fields successfully, and I think that we benefit greatly in the markets from using it. I mean, if it's been around for 40 years in the sports world, sports is also highly competitive, a very ever-changing kind of landscape that you're involved in, being on a football field or something. It's also changing all the time. It takes a lot of skill, a lot of practice. There are a lot of similarities, so why not use something that works and that's been documented as working? And that's why I started using all those tools, and I tried them out myself, right? I said, okay, I read this book about NLP or about sports psychology, and let's just give it a try, see if it works. And it worked for me, and that's why I talk about it and why I advocate it. And then I found that in terms of taking my performance to the next level, or at least removing the obstacles to better performance, the mental game tools that I write a lot about in my book and that I write about on the blog, that really helped. So that's what I do.
So maybe you can share. So that's where that kind of gets us right into the topic of routines and rituals. So do you have like a pre-game or pre-market routine that you run through, either whether it be visualization or some other exercise? Is there something that you regularly do first thing in the morning or before you start trading at this time?
Yeah, I do. I do sort of a refresher visualization every morning, usually when I'm in the shower. Otherwise it's like useless time. So I do a sort of 5-minute like speed visualization. And part of it is visualizing, and then I add sound into it. So I sort of say what I want to be during the day. So it's a little bit of affirmations as well. But
based around
I find
just around the broader day of what you want to happen during the day.
It's less about market activity. It's more like sort of I'm making the right decisions. I'm cool and calm and collected.
Gotcha.
I'm a successful fund manager. That's what I'm saying. And then the visualization is really about me walking through a successful day in the markets, start to finish. And then I have a minimal routine that I do every day, which is I sort of wake up, take a shower, do the mini visualization. And then I make sure to check Bloomberg. I make sure to check the news, and then also what's happening overnight in the markets. And then I have a spreadsheet it's linked to Bloomberg, and I update it, and it sort of says what all the major markets that I follow have done. And then I copy paste that into my journal, and then I'll journal some in the mornings, some in the evenings about. These are my positions, and sort of part of it will be game plan, and then part of it is free forms. I was thinking about this, or I'll make a note to myself. I'll sort of do a little mini exploration in the journal, and then I'll make a note to myself. Okay, explore this potential position, explore that potential position, or one thing I've been working on recently is my style is really. It's very much pairs trading. So, I have a long and a short position, and I try to make sure that my net market exposure is very small.
Yeah.
And then thinking about how to size those positions, and then the volatility of those pairs.
Yep.
What kind of risk should I be taking? How does it correlate to the volatility? So for instance, something is more volatile. If I'm risking the same dollar amount, then, the stop loss will be actually tighter, or maybe there's another way of looking at it. So that's the kind of research I do during the day.
And thank you for sharing your ritual. Do you get a chance to squeeze in any meditation inside that day? And do you try to squeeze in any exercise? Is that part of your routine at all?
I'm very religious, so I don't do meditation, but I do a lot of prayer.
Okay.
So, it has the same meditative effect.
Yeah.
The spiritual content is obviously different, but, it has the same meditative effect. So I don't really do any markets-focused meditation or any kind of clear your mind meditation, but I do a lot of prayer. And then in terms of exercise, I don't do exercise every day. I go to the gym sort of a couple times a week. And then I walk a lot, or I just sort of like long walks. And that helps me to clear my mind. So that's what I use is really a reset button.
Yeah, people using movement and walking or exercise to kind of clear their heads. Seems like that's just, seems to be a best practice around, just taking your eyes away from the screens and finding some time for good, for good thoughts to show up, right? Keeping them in front of the computer.
Yeah, and then, I found for myself that if I given a choice, at 6:30 in the evening between spending another 45 minutes with the markets or taking 45 minutes to recharge my batteries and sort of change up my focus, I'm a lot more productive and I have a lot more energy if I do that. There's a great book, or there's a great series of books by a guy named Tony Schwartz about managing energy. And he looks at the top achievers all across fields, and he says, the top achievers, the peakest of performers, are actually those who manage their energy best, and they actually make more time for rest than average performers. So, for instance, professional athletes sleep like an insane amount, like 9-10 hours a day. But, they work very hard physically, and that's how they recharge. And then the same thing for, well-known CEOs, they take a lot of time for exercise, for relaxing, or for meditation. So I figured if it works for them, then I should do the same.
Yeah, absolutely. That's such a great piece of advice there. Just, prioritizing just rest and recovery so you can replenish your emotional and physical energy. That's a great piece of advice. So I know we're running up on our time now, Bruce, so maybe we can just fast forward just a couple more questions and then we can wrap things up. You've already mentioned a ton of good books, so what other good books around trading or just, related to performance would you recommend? Sounds like you're an avid reader, so you must have lots of your favorites.
Yeah, I would say my favorite book about the markets still, if I had to choose one, is Reminiscences of a Stock Operator.
Sure.
And the reason for that is that, this is a guy who he sort of lays bare his journey in the markets, both his practical journey, like what he was learning to do in the markets in terms of buying and selling, but also his really up and down roller coaster emotional journey. And I think that that book, was written like 100 something years ago, but it still works for me because just following his emotional journey and realizing this guy was one of the greats. And he had this huge up and down roller coaster. He, for instance, he used to lock money in a safe so that he wouldn't be tempted to put in the market. He used to tell his wife, to wire money somewhere else so that he wouldn't have access to it. This is a guy who had a really psychological challenges, and it's informative, it's instructive for everyone to read it and realize, look, even 120 years ago, human beings are the same, and that sort of emotional ups and downs that come with the market are the same for everyone. In terms of more process-related books, I've read a lot. My favorite books are still probably the books by the three books by Dr. Steenbarger. So he's got Trading Psychology, he's got Enhancing Trader Performance, Daily Trading Coach. All three of those are amazing because they really, he's a psychologist by training, but he is also a coach to many, very top level traders, investors, portfolio managers. And he really digs into all of the psychologies and also all the process stuff, and he understands better than anyone the link between them. So, his book, Enhancing Trader Performance, I'd be ashamed to tell you how many times I've read that book. It's pure gold. And I find that, he really understands process like no one else, and he understands the link with psychology like no one else. And every time I read it, I get something new out of it.
Yeah, the books are so dense, but they're so jam-packed with information that you're right. A regular reading of it's always good to refresh one of those ideas. So maybe one last question for you, Bruce, and then we'll shut it down. So, given your journey and where you are now, if you could give a piece of advice to your younger self, let's say when you're in your early 20s, what would you tell that person? What would you tell that younger version of you?
I would tell them that, all of the stuff that's written in Market Wizards, well-known bloggers give the same advice, and then, people who appear on CNBC who are, very well-known fund managers, they would give the same advice. There's a reason that everyone is giving the same set of advice, because it's really worthwhile. So my advice would be really to listen intently to a lot of the advice that's out there, and not, the sort of the hucksters who are saying, oh, buy my system for $50 that has, never had a down year and has made 30% a year for 30 years. No, that's obviously, that's not what you need. What you need is really good advice about sort of a holistic advice, process driven, teaches you, how to be an investor or a trader. And my advice would be to really listen carefully to that advice. The things that Edwin Lefebvre was writing, over 100 years ago, Bernard Baruch, Gerard Loeb writing, Benjamin Graham, more recently, the Market Wizards, George Soros, all of that, they're all kind of saying the same thing about, the process parts, about the psychological elements. So pay attention, listen. So that would be my advice. And it's sort of like, it's almost trite, but, there's a reason why those people are writing that and saying it's the most important things to know and to keep in mind. It's because it really is.
Yeah, that was great advice, and I think the one common thing from all those people you mentioned is that they never write about that kind of lottery mentality approach, right? It's never get rich quick. Let me give you a yeah. That's always going to work. It's that journey of mastery. So
there is no silver bullet.
Yeah, there's no silver bullet. You've covered so much stuff today, Bruce, and I really thank you for your time. If people want to learn more about you, or if there's anything else, if people want to read more about your stuff, where can they find you? And is there anything else you want to share with the audience today?
Yeah, I mean, I have a blog. It's howloftrading.com. That's got all my articles, and it's got links to more information about my book, and then some other products that I have. And then, my last piece of advice would be that I'm actually really thankful to everyone who reads my stuff and who interacts with me. I've learned a huge amount. I'm very thankful for all the interactions I've had with anyone from total beginners to the really top flight professionals like Dr. Steenbarger or Mike Bellafiore and Steve Spencer at SMB. So all the listeners out there, thanks a lot for listening. Thanks a lot for, if you have questions and write them, they make my day. And actually a lot of the stuff that I write, it comes it comes up as a result of questions or of discussions with people. So, I really thrive off this kind of interaction. So, thanks for being there. Thanks for interacting, and let's keep the dialogue going.
Excellent. Well, thank you so much, Bruce. I appreciate your work as well. So, thank you so much for being very prodigious with all your efforts. So, have yourself a great day, and I look forward to talking to you again.
Thanks a lot, Houston. Yeah, thanks for the time. I really enjoyed it.
Absolutely. Talk to you soon.
You've been listening to the Trading Edges podcast. We've taken this interview and summarized all the big ideas so that you can take action. Just head over to thetradingedge.org/podcast to find the show notes, transcript, resources, and to continue the conversation.